I just want to go onto Zoom now and then speak to Professor Patrick Asuming to also pick his thoughts about the first, 10 months of the John Dramani Mahama administration. Prof, if you can hear me, let's get your assessment of how far the government has come.
Okay, good afternoon, and I've been enjoying the discussion going on in the studio. I think that, I agree with Nelson in terms of, first, the performance has been very, very good. This year has gone extremely well for the Ghanaian economy. If you look at where we started the year from, also doom and gloom, and things were looking very bleak. But, I agree with Nelson that it's a combination of factors that have gone in our favor, as well as some shrewd policy making that has brought the results that we've seen. If you start with the fiscal side, you realize that coming toward the end of last year, even though we are in an IMF program, we still managed to mess up our finances, right? And by the end of the previous review, we saw that we've missed a number of our targets. So I think the new administration coming in, I think it was very good choices, especially with the finance ministry, deciding that first they were going to shift the focus of the consolidation from excessive reliance on revenue through new tax handles, and then focus a little bit more attention on restraining government expenditure. So I think that has been extremely helpful, because you needed to show to the IMF that you are committed to the consolidation, and at the same time you also needed to bring the program back on stream, so that you calm people or the investors who are a little bit concerned about where how we ended the year. So I think that was really good, and you saw that the confidence immediately started spiking up, both consumer and business confidence, and I think that helped. So we got to a great start. Then, but on the fiscal side, I think looking into the 2026, in some sense, the 2025 budget is unique and it's going to be very difficult to replicate.
How so?
In the sense that if you look at how much expenditure restraint we've implemented, it's the kind of thing that you can only do in the first year of administration, where you have a lot of goodwill and people are generally very give you a lot of leeway, and you can use the first year to try and set up. So perhaps people will pardon you for not implementing some of your flagship programs. So that is how the government is able to restrain the expenditure the way it did. Going into 2026, I think the expectations are going to shift. And that means that people expect that the government will now start really implementing their programs, and people begin to see actions happening. And so I think that's why it's very important. It's very fascinating to see exactly how the finance ministry is going to manage this. And I think a big deal is what we are going to do with the VAT reforms and how much potential it has to expand the revenue envelope. Because that's going to determine how much the government can begin to really implement these programs while keeping the consolidation on track. So I think that part is going to be very interesting to see.
Indeed, but I stay with you a while longer because I also want to pick your thoughts on this bit of the economic conversation. You know that the economy expanded, however, the expansion came from the services sector. We didn't see expansion in agri, we didn't see expansion in manufacturing, we didn't even see expansion in industry. And so we also say that the economy is still at risk because we have not been able to expand critical sectors of the economy, for which reason we are not seeing the impact we so desire.
I will agree with that statement for the first quarter. So, but for the second quarter, actually, agri grew extremely strongly. So I think if you look at the second quarter growth numbers, it's more broad-based than we saw last year, than even in the first quarter, even though on both occasions we have performed the expectation. So I actually think that agri actually has done very well, even through the first half of the year. It's done quite well. And the thing is that, especially when you look at first quarter and second quarter agri performance, first quarter and second quarter is
Opportunity
really
to comment
planting and preparation. So
on
when
the
first
appointment
quarter does
committee's
well,
report
you know that the
on the
rest
president's
of the
nominee
year agri will do
for the
well, and that's
office of
why
Chief Justice.
I'm
Are
sure
you
you've all been
contributing to it
reporting
or you are
on the issue of
commenting?
Gov't
I'm
for
contributing.
some key grains. You could really predict that from the first quarter indicator because first quarter is more investment, more or less, when it comes to agri, especially for some of the grains. So because we saw strong growth there, you could tell that agri was going to do well. But I think where I agree with you is that, in some sense, the financial indicators and the monetary indicators have improved faster than the real sector indicators. And I think this is where people begin to complain that, oh, we are not really feeling the kind of improvement in our pocket yet. Because, look, we've seen the inflation, come down to, very quickly into the target band. We've seen the financial sector doing doing very well. But it has yet to translate into the kind of improvement in terms of what will really touch a lot of lives. And I think this is where a big part is that, the flagship programs on the real sector, if you talk about the 24-hour economy, the Nkukon and the other things, you realize that the government has spent the first 8 months or 9 months setting up structures, setting up secretariat. So really not much is happening there. I think that is where there will be a expectation that going to 2026, okay, let's see the action. The first year we've seen, you stabilize things a little bit, but people expect that we build on it, and so that we begin to see how the stability will translate into, what is happening in people's daily lives, people's personal economies.
Very well.
So I think overall, it's not really the case that especially if you look at the second sector GDP number, the growth was more broad-based. If you compare, the first sector, the first quarter and the second quarter, the economy is divided into about 20 subsectors. Even though the first quarter growth was way stronger than expected and was the highest we've seen in about 5 years, you realize that there are about 5 or 6 subsectors that contracted. By the time you move to the second quarter, that's not the case. It's only 1 or 2 subsectors that contracted, and almost every sector expanded. Crucially, 2 sectors that have suffered significantly, cocoa and electricity. Those are subsectors that have suffered over the last, the preceding 8 or so quarters. But you begin to see those ones recording positive growth, switching from negative to positive. So I think all of those give you the indication that the growth you've seen for this year is more broad-based, at least in the second quarter. Then the issue about the role of the central bank and the currency and all, well, I think that, from my point of view, we cannot describe the currency since the first quarter as stability. I think what we can describe it as appreciation of the currency, but it's not what stability is. If you check, we started the year relatively stable around the 15. Then, for whatever reason, in March, from the end of March, April, May, we just caused a sharp appreciation. It appeared to stabilize around the 12.5 range. And then suddenly, within a week, somewhere in September, we still allow the currency to appreciate sharply again. I think that is where, we really have to question what the strategy is. Our reserve position are strong, but as was pointed out, it is not strong because we have changed the structure of the economy. It is strong because we are enjoying the positive side of the volatility of our primary commodity items. So I think, yes, I would have preferred that. Look, if you say the true value should be around 14 or 15, and therefore we keep it there. And then, we make sure that, as the president said, we keep the the depreciation appreciation within a small band. That is, for me, that would have been preferable than the kind of appreciation that we've done. That's not to say some people are not going to benefit. People who are into importing, they will be happy. Their businesses will be booming. And, we've seen that because they are also not passing on much of the appreciation to consumers by way of price reductions, their profit, their bottom lines are doing well. But that is coming at the expense of other agents and other sectors of the economy. For instance, you can't say you want to use 24-hour economy to diversify your export base when you cause this kind of appreciation of the currency. It's not consistent. And I think that when a lot of the gains are coming from more or less a windfall, well, in ChannelOne, we teach people that when you have a windfall, it's better to save a lot of it than to consume it, because that is an unusual situation. We haven't had the gold price go the rate it has gone. So I think perhaps we could have kept the currency stable rather than this excessive intervention that has caused the currency to appreciate. So I think you can understand why it's a hot topic for debate, because at the end of the day, the economy is extremely import dependent, and when the currency appreciates like that, many people will be happy. But I think we have to look at the bigger strategy. What are you trying to do? Where are you trying to position this economy?
I can really imagine.
Overall, you have to say that the government has done reasonably, has done very, very well.
Well, I see from what I gleaned from what Prof is talking about and picking on what some of you have also said, it's more or less like fiscal execution has lagged behind, and so the real test will really come when the government begins embarking on some capital expenditure projects as well as some of its policy initiatives. So I'll be speaking to the economics people here as well as the finance people and the tax people on how that is going to change the narrative going into 2026, and also come to the businesses to look at how the VAT reforms and even the factors of production that they are always saying that it is going up the roof, how it's going to change the game. But Francis, let me come to you. The 2025 monetary policy report by the Bank of Ghana that was released in September, the expected revenue was 122.9 billion, but government has actually raised 116.2 billion Ghana cedis, if you remember, and this led to a cash basis deficit of some 1.4% of GDP. Expenditure-wise, to the government anticipated 152 billion Ghana cedis. As we speak, some 131.1 billion cedis has been spent. Really, is it because the government is not delivering on, the capital project that I spoke about and the policies, for which reason we are seeing some form of tightening, which a lot of people are saying that the government is not spending? So if we are to see the real test of this government's prospect in terms of the economy, they should spend, they should embark on projects, they should roll out their big policies for us to see.
Of course, in 2026, when the government starts spending, especially the big push, which is the biggest element in their expenditure, we're going to see the real test. But you realize that they just want to be disciplined. Half year, they were down by their revenue target. And one of their biggest revenue line was customs. Like I said, immediately the CD started appreciating. When people import, importers are going to pay smaller because the CD conversion is now in their favor. So that dropped their revenue basket. And in Ghana, our revenue, the direct tax to indirect tax, we do about 54 to 36%. Direct tax consists about 36%, and the indirect tax. So more of our revenue line comes from the indirect tax bit. Again, they had already scrapped the e-levy, so they were losing on that front, and the betting tax has also gone. So all of these things were eating into their revenue basket.
Are you able to tell us exactly how much the government lost in the first 8 months or 10 months, having scrapped e-levy and then the 10%?
E-levy was around, I think, 2.9 billion cedis, and they did it in April to 2nd April. So that money was completely off. Of course, the betting tax was not given. I think betting tax was given as 150 million, so that is not a significant
But the
amount.
1% fuel levy didn't play any role in terms of the revenue.
1% came in late. I think we started in July. Remember, there were that back and forth. Immediately they started, the government said that they should hold on. That was when we were experiencing some, fighting in the Middle East. So effectively, the 1%, which was going to give us around 5.7 billion, came in late. And I think it was even after July. So that did not raise enough revenue for the first half of the year. So when they realized that revenue was not performing, they even attributed it to smuggling and then other, customs mismanagement. So they will step back and say, look, guys, we cannot continue spending when the revenue is not in. And therefore, they held back. Now that things have settled, like you said, 2026 is really going to be the test. Projects are going to be paid for. And immediately you start spending. And that is why they intend to reform the tax system.
But wouldn't the picture be more dire if the tax is revised and also the COVID-19 levy going off, if we are already struggling to raise a lot of revenue because we scrapped e-levy, we scrapped betting tax? If COVID-19 is added to it, are we not going to, squeeze the revenue,
And I think that is a risk that we are hoping that the minister will be able to maneuver. It's really a risk because COVID-19, I think I shared some data with you, between 2026 and 2027, we are throwing away around 10 billion cedis. And the question is, where are we going to get that money from? If, property rate in the past has not been performing very well because, the district assemblies have not been doing enough on the property rate.
What about even oil receipts? We know that is not even doing well.
Oil receipt is in danger now, especially because our production is dwindling. That's number one. And like Nelson said, these are commodity prices, so you don't bank your hope on them. Anything can change tomorrow. Tomorrow, if Russia decides to go and bomb somewhere, commodity price will just go off. Gold price can also change tomorrow.
So extractive royalties to become better.
Exactly. It's so risky to, rely on such commodity prices to bank your hope. The only thing we can do is to come back and reform our VAT system, which in my perspective, I think that the benefits will take a little longer time. So, like I said, 2026 is a very complex platform for the minister to see how you're going to maneuver through a time when you need to spend to really execute your projects, whilst you are, scrapping some revenue lines, and you don't even know where the money is going to come immediately. We are banking our hopes on the modified taxation and then also the sustained tax education, hoping that when we start educating the people, they will voluntarily comply, start paying the taxes.
But really, will compliance work if the rates are still high?
At least the reform will bring the VAT rate from 22% to 20%, which for my view, I think is good, even though still will remain the highest
in the
sub-region. But it is better than the experience we had in August 2028. One of the worst situations we did to our VAT policy was to mix the sales tax with the VAT system in August. And I'm happy that the minister is saying that he's going to reverse it. But we are now hoping that all of these things will bring in the needed revenue going forward. Other than that, when they start spending, all the metrics that we've spoken about will go back to their worst situation.